Hey, welcome to the chapter where we talk about trading and trading setup and how we can identify when we should look for a trade. So, before we actually look at any chart, actually, this is the most important chart that you should look at. Is actually the trading time. So, Forex is a 24-hour market, but you definitely do not want to be trading 24 hours a day. In fact, there's just a few sessions or hours in the day that is more fruitful and profitable for trading. All right, let me go through that. So in the Asia session, we basically have the overlap between the Sydney and the Tokyo session. So at the start of market, which is EST 5 a.m., basically you only want to look for trades in the first 4 hours, right? So usually once Sydney starts to go for lunch, after the lunch session, things gets a little bit slow. So only the first 4 hours, right? Of course, there are times when trading is active even after that, and you may lose or not lose. You may miss a trade, for example, but that does not happen very often, right? Most of the active session will occur in the first 4 hours. Next, let's look at the London session. So again, for the London session, you usually want to look for a trade between 3 to 3.5 hours into the London session, right? So from the start to 3.5 hours, and that's about it. In between here, London session and before New York session, there's about 2 hours or 1.5 hours where things gets a little bit slow, right? Price action starts to drift, and basically traders are beginning to put their how to say their tricks or the manipulation just before the New York session. So usually do not trade in between here, right? And then next you have a New York session. So only look for setups in the New York session within the first 3 to 3.5 hours as well, right? So just before lunch, maybe half an hour or 1 hour before New York lunch, trading volume start to just dry down, right? So you only want to find your setup in this session. So while of course some other times you have tradings going on a bit later on or whatever, right? And you may miss a trade, but um, more often than not, if you try to trade outside of these hours, you will basically have more losses. Okay, now let's go to when and how you actually look for a trade. So what do I have here? So this is a chart that I'll use. So what you want to do is put on the hourly chart, right? Zoom out a little bit so you can see price action, and put on the 4 hour stochastics, right? So this is actually a multi-time frame stochastics. So you put the 4 hour on the 1 hour chart, and basically what you want to do is you're looking to trade when the 4 hour stochastic is on the overbought or the oversold area. But when you look at this, you will notice something, right? You notice that in fact the stochastics are up there for quite a long time, and then you'll be wondering, oh, must I be, this is one day, this is another 1 and 3/4 day, so must I be there for almost 1.5 day waiting for an entry? So the answer is no. You only check whether price is in this area during the trading time that I mentioned. So if you have a job, you work in the daytime, depending on which time zone you are in, most likely you can only be able to trade in one of those time zones. And if you're lucky, maybe two of those time zones, right? So you're only looking for trading opportunities during that 3 hour time period, and not any more than that, right? So what happens if the setup is triggered when you are not on the screen? Well, too bad, right? There are other pairs to look at, and there are other days to trade as well. So in my earlier video, I actually got the trade here, right? So the trade here occurred exactly during New York session and when the stochastics is above 4 hours. I will actually go more into how to take the trade and what triggers the trade. So this video is for you to just know when should you start putting pairs on your watch list, right? So you don't want to be looking at 20 over pairs for 3 hours or 4 hours every day. So what you do is this: you have this template here, and you start looking at pairs. Okay, so just imagine that now at this point of time is a trading is a optimal trading period, right? So you see, oh, it's not at the oversold and overbought, right? So you go to the next pair. Oh, nope. You go to the next pair. Oh, nope. You go to the next pair. So you just keep doing that, and when you reach a pair that looks like it's going to be in the optimal trading area, then you put it on your watch list, right? So you do this. Here you have. You do this about 1 hour before the trading time. In fact, you can do this pretty fast. You can probably start half an hour before the trading session begins, right? So here, what I have is I think this is the Euro GBP, if I'm not wrong, right? All right, so this one is in the optimal trading area. So now you want to wait. You want to wait for the trigger, right? I will show the trigger in another video. In this video, I just show you how you filter or look for pairs that may have a trigger for you to trade later on in the session. So just keep doing that. Another one here, but I can safely say that this one will not be a good trade at the moment. Why? Simply because between when the stock move from top to bottom, price actually only move, what is that, 60 pips, right? So what you want to see is actually between the top and bottom, it moves at least 2 to 3 ADR. So the ADR is about 100. So you want to see price move about 200 to 300 pips between the top and the bottom. When you see the bottom, then you measure to the top, right? So the bottom is here and measure to the top. That's less than one ADR. And if you were to look at maybe another example, okay, like between here, okay, and this bottom here, right? Okay, you have 130, right? So it's a larger move, then usually you get a better pullback. So, but anyway, this is where you start looking. So let's just go through a few more examples. Nope, it's past. Nope, it's gone. Nope, it's gone. Right? Here you see one of the examples where you see a strong downtrend. And when you see a strong downtrend, you'll definitely see the stochastics being in the oversold or overbought if it's an uptrend period for a long time. So this is 3.5 days. Obviously, you're not going to be trying to trade this for 3.5 days. And in fact, if you were to go to the trigger, you end up trying to, if you try to buy into this strong trend, you end up having quite a few losses. In the trigger video, I'll show you how you can identify this type of trends, and then you will not be trading it this way, right? There'll be another way to trade. When you see price choppy this way, right, then you know, okay, it's choppy, this is good, right? When it's choppy, you can look for ways to go in. Okay, so I hope it's quite clear on how you can start looking at the stochastics and when you should be looking for your trade and which pairs you should be putting on your watch list. So this works for everything, right? You can oil, right? You can see, you can do it for oil over here, right? It came down from here, but again, the trigger, this is not a trigger, right? This is not, you do not just sell and you see price crossing here, right? You need to, you need to actually check on the lower time frame and the trigger point, and at the trigger time whether it's a valid trade or not. So I'll go into that. in later videos. I hope you have found this helpful, at least to understand how you can filter which currency pair that you will be putting on your trade list, and when you should sit down at your computer and wait for the trade. So the key point is you always wait for the trade, right? The trade will come to you. You do not chase it. If you chase it, you're gonna lose money. All right. So stay tuned for the next chapter.